Good morning, trading world. It is January 24th, 2023, 8:17 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook: Don't be fooled by immediate direction. The markets are still bad and getting worse. Now, the economy is in a really bad place regardless of what certain reports say. I have warned repeatedly about using or believing in government reports. They are slow and can be manipulated to spread a certain narrative. Even when the reports have the correct data, they change the rules around them to fit their narrative. Let's look at two things, one being the employment situation, two being GDP. In the employment situations, reports the last 2 months have not been too far out of line. I seem to remember one or two reports being better than expected. However, everywhere you look, there are layoffs. This can't be good because a lot of these layoffs may not show in the employment situation reports. We can look at places like layoffs.fyi that kind of give you data on certain layoffs or companies and their layoffs, and even this doesn't give you the whole picture because you have places like Microsoft that are letting go as many, if not as more, as Google that are not listed right here at the moment. But there are a lot of companies that are laying off, and as you can see, the percentage of their workforce. So that's one thing. Now, the other thing is GDP. Everyone knows that 2 consecutive quarters of negative GDP equals a recession. Now, if we go to the BEA, we can bring up the GDP on percentage. And we can see we had negative GDP in both the first and second quarter of 2022. And yet mainstream refuses to admit that we are in or have been in a recessionary period. Now keep in mind that it takes 12 to 18 months for the effects of rate hikes to be felt on Main Street. And you have a compounding issue ahead. Now, let's get technical for a second. Don't be fooled by the immediate direction of the market. There is such a thing as strong hands selling to the weak, or as it should be called, professionals setting up retail to hold the bag or be stuck with the bag. If we take a money flow indicator, and that's this indicator here, and what the money flow indicator does, it measures whether money is flowing into or out of a particular issue. So anything above the zero line means money is flowing into, anything below means money is flowing out of. And we definitely use the direction of the slope as momentum. So we could be in a negative point where money is flowing out of, but we could have a little momentum building, but it still doesn't mean we're at a point where a surplus of money is flowing into an issue, giving us good reason to show or believe that the trend should be positive. Now, also, it is important to understand that retail traders only make up about 10% of trade, and we may have gotten up to about 25% at the height of the COVID-driven volatility spike, according to Citadel Securities. This means in order to move the meter on a money flow indicator, institutional trade has to be involved. Now, as you can see, since the lows in October, excuse me. Now, as you can see, since the lows in October, institutional trade has not been involved. This is the strong selling to the weak, setting up John Q. Public to take the loss. I am almost sure a fall is coming. I can't say 100%, but in my beliefs, in trading, nothing is 100%. Except the fact that you will eventually have a losing trade at some point. What I can say is that before the fall, we will cycle. There are a lot of ways to look at cycling, but I want to focus on indicator cycling. I believe on the daily and some parts of the weekly, we are going to cycle. Now, when it comes to cycling, it's more prevalent on bounded indicators, but you can see cycling on unbounded indicators. So let's take these two examples. As you can see right here, I drew a trend line. I do believe the MACD, which is an unbounded indicator, will cycle to a lower high. And that's somewhere up in this area. And it could possibly even get higher than that. But I do believe we get a cycle on the MACD before it actually turns down again. Now, on something that is a bounded indicator like the RSI, I do believe before we fall, we are going to hit the overbought area, which is up here around or above 70 reading on the RSI. So it's easier to see that cycle come before we hit back down. So these are things that I'll be watching. And you can see this on any indicator you use. Bounded indicators like the RSI and stochastic will show it best, but it is still visible on unbounded indicators like the MACD. So with that being said, let's get into the key levels to watch for today. All right, here we are back with the key levels of the day. Starting On the support side, we have our Jack support at 399 to the 398 area. Queen support is 397 to the 396 area. I expect a decent amount of concentration in trade to happen around or in between this area, 399 all the way down to 396. And King support 395 to 392. And there could be a spike down to this level as well. On the resistance side, we have our Jack resistance at 400 to the 401 area. Queen resistance 402 to the 403 area. And then King resistance 404 to the 406 area. The main thesis for today is bearish, closing below the 463 with a projected target low of between 399 and 392. The alternate thesis is bullish, closing above the 463 with a projected target high of between 400 and 406. The main channel we are in is from 397 up to 416. The main channel below is 397 all the way down to 379. Now yesterday market strength and breadth went up the first half of the day, then down the second half of the day. Even for the algos to take us higher if possible, they need a break and regroup to continue. Remember, if you've been with me for a while, I always talk about the market and comparing it to a runner and how the market has to consolidate, or as a runner, take a water break. It can't just run forever. So there has to be these periods of water breaks or rest. So even if we do go higher, we have to take that rest period or consolidation. One thing to look out for today, we do have harmony between the technical side, which is bearish, and the quant side, which is bearish, which increases the odds of that close below 400 and us actually having a decent, for the range that we've been in, a decent drop. This brings us to the scenarios of the day. Give me just a moment while I bring up the scenarios. All right. Our first and most probable scenario is going to be our expanded range day structure. We could have an initial push up to resistance, consolidate before chopping back down to support, then possibly starting a head fake back up. This is our expanded range day structure. And that head fake is just saying that we get back up either today or overnight, but we get it's pretty much a fake out. We get an even deeper push down at some point, maybe Wednesday, on one of the primary expiration days. So that is our expanded range day structure. All right, our next scenario, which is looking more and more likely as we get closer to the open, is our rounded reversal day type structure. We can get a continued push lower toward the Jack or Queen support area and find midday chop around either the possible Queen or King support before going back up with the same energy or force that we came down with the first part of the day. That is our rounded reversal day type structure. All right, last but not least is our trend day down day type structure. We open, gap down, and start with a push back up towards the previous close represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day. We usually find our midday chop around either the possible queen or king support area. Not all the time, but often we do get what's considered or starting off the second half of the day with a head fake looking to continue the primary trend of the morning, which would be down, and then at some point turning into a head fake as we get a push up or a slight rally going into the close. So those are the scenarios in order of importance this morning. Again, like I say, I don't know the moment, I don't know the hour. I am almost sure that we're going to get a great fall at some point. And all of my models have been pointing toward February, March for that fall. And so right now we're just kind of trying to do chop back and forth over a great range, just getting those indicators to cycle, setting everything up for that fall. And earnings are going to be a great piece in that. I definitely want to focus more on Microsoft coming out after the close today, I believe. I know Verizon and Johnson & Johnson has already released earnings numbers, and forgive me because I am not sure about Microsoft at the moment. Let me try to scan real quick just so that I can see if I can get a handle on where Microsoft is. Give me just a moment. All right, Microsoft is after the market today. I may want to take some type of position in Microsoft. It would be like a gambling money type situation, something that I can afford to lose just to take a shot. And when doing something like that, I usually like to use a butterfly or out of the money spread to take advantage of the volatility or jump that is possible to happen. So, as always, your most important job as a trader is to protect the capital that you already have. And we do this by knowing and understanding the risk that we have on in each position. And we manage that risk in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.